a way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light.
Good morning, everybody. Morning, Sufi. Morning, Tony. I believe there's two other people on here. Not sure who that would be, but welcome. Good morning. Fritz, welcome, welcome. All right, but yeah, hope you guys have had a safe week. I like your name, bro. Chawazi? Morning, brother. Definitely like that name. But yeah, I hope you guys were safe. Things have been pretty chaotic for the most part, but sometimes that's how it is, and how you're able to navigate chaotic times will definitely benefit you in the future, depending on how you obviously deal with those chaotic times. But yeah, so let's actually go over what the news is. And I'm going to look over some COT stuff so that maybe you guys can start to understand that a little bit, at least at a basic level. I've talked about it before, obviously, and it's a lagging indicator. But I can tell you right now, if we start to see the indices move higher, COT is going to have a very powerful study that we've been referring to, and just basically will show evidence as far as COT being a very laggy yet powerful indicator when things do kick in line with stuff. All right, so yeah, let me do a couple things. Yeah, what's one highlight from last week? If y'all could leave that in the chat for others to basically see and either give some advice or critiques, whatever the case may be. I'd like to kind of hear what you guys experienced last week. So yeah, leave that in the chat while I do this real quick. And you know what's crazy? I talked to one of my good friends that basically started trading at the same time as me. And we don't really talk a lot. We're always busy. But he talked to me this morning, and we were kind of just talking about the journey and, you know, how it's been a wild journey. And in the last 3 months, I guess he's been able to pull down $25,000, which is astonishing. It's crazy. It's just a testament. We've been through so much, and we started with a lot of people, and the percentage as far as how many people fail versus who succeeds, I mean, it's literally insane. It really is. We're not special. You know, we just chose not to quit, and, you know, just really, really poured into it and have faith. And it's amazing what just not quitting and keeping the faith will do. It's truly amazing. It really is. In the private community I'm going to bring him on later so that maybe he could talk to our private community students, share his journey, share some of the things he's been able to accomplish, and things he had to deal with, things he had to overcome. So for those of you that are in my private community, look forward to that. He's amazing. He really is. Like many of the students are. Everyone's amazing in the private community. It's very intentional that I have good people in there, because, you know, I want to have a group of people that can pour value into each other, and you know, just have our little corner of the internet that can provide value to, you know, in all directions, you know. But yeah. So yeah, let's get started with the bonds and yields. I mean the bonds. We're gonna get that next, but let's get started with the news. So Sunday, we never trade anyway, right? It's part of kind of just how I operate and how I encourage you guys to operate, because you think of power three, and if you think of power three on the weekly range, each day, just like how each session has a role in the daily range, each day within the week, or each day overall within the weekly delivery has a specific characteristic when it comes to power three. So when you get on the chart every week and you look at the market and you make an assumption as far as where you think it's going to go, the start of the week, generally Sunday, Monday, sometimes going into Tuesday, you know, if there's news on Wednesday, sometimes it waits and drags out all the way to Wednesday. But generally the start of the week is consolidation, manipulation, and then Tuesday, Wednesday has a 70% chance of making the higher low of the week. And then from there, you can get in line with the lion's portion of the weekly range, which, you know, at that time, that's when you want to try to corner price into what your narrative is, you know. But anything prior to that, you want to think of it as consolidation, manipulation. So if you're bearish, a lot of times you're going to be wanting to seek bullishness in the first couple days of the week, every week. And then, of course, vice versa, if you're bullish, you know, you want to go against that at the start of the week. And you want to drill that into your mindset, because that's how things operate. I mean, there's no getting around it. You know, people can argue with it, try to fight against it. But more often than not, if you are right on the weekly range in terms of the direction for the week, but you get stopped out early in the week trying to push that, this is the reason why. So then if that takes place in your trading, you should consider just sitting out and observing this phenomenon, and just starting to convince yourself as far as how common this is, because it's very common. It happens all the time, because it's just the way it is. Power 3 happens constantly, over and over and over. It's just the way things work. You know, so sooner you can accept that, okay, and try to navigate your expectations around that, the better opportunities you'll have to catch the lion's portion of the weekly range. It's pretty funny how people are asking questions here. Does anyone have experience with the broker and futures? Very interesting. I'm sure they're getting a lot of business because ICT. He doesn't call out brokers at all. But AMP, apparently, at least even from my perspective, I've had some issues technically. And he did also publicly. And they instantly, like within 24 hours, went in and fixed whatever the issue was. Like it didn't let him get out of the trade, right? And he was trying to get out. And because he screen recorded, which is what I tell you guys to do constantly, you have a journal and then have a screen recording of your performance. Whether it's like a time when you take an entry or just like I do and what I encourage you guys to do, which is record the whole session that you're involved in. So if something happens, you can bring that evidence to the broker, and instead of going just off of what you're saying, they'll have to visually see it, and you'll have a better chance of them fixing whatever problem you dealt with, whether that is price not triggering in your stuff or your exits, or something glitches out, like, something along those lines for the platform. They can go in and fix whatever it was if you can prove that it did not assist you. Which company or broker was this? The one that ICT had an issue with and they fixed it? Is that what you're talking about, Tony? If that's what you're referring to, it's AMP. He had an issue with AMP. He also had, it's AMP. He also had an issue with TD Ameritrade, and they kind of scandalous. They kind of mess with things, tried to play him. When you're really, really good, when you prove that, and the broker can see it because they can see everything you do, except certain things. A lot of times they'll try to white label you or black label you. I forgot what the hell they call it, but it's where they start messing with you, because they don't want to pay out. No broker wants to pay out. They all have their little dirty tricks, and when you prove that you're really good, they'll try to mess with you. That's why, again, it's very good to have an insurance policy. That insurance policy is recording your engagements. It's more important than just journaling, to have evidence of what you're doing. It's protection, because we're in a very amazing industry, but then again, there's a lot of nasty sharks that want to take your money if you do good or make you not successful. Because remember, this was not created for you to be successful. It wasn't made so Joe whoever can go and build a life for himself. It's made for the transfer of money, transfer of wealth. And then of course long term gives you the opportunity, if you make the right decisions, to grow and build a good amount of wealth for yourself. It's not guaranteed. That's why we have to sign lots of terms of service, basically signing our life away, trying to eradicate their ability to be responsible for any issues. But a lot of times, brokers still want you in the market, because if you're not trading, they're not making money off fees. So it's even more relevant with funded accounts, because they don't want you to succeed, because they have to personally pay you out. So that's why the rules are so difficult. That's why they make it super stranglehold for a lot of the risk rules. But it's a double-edged sword. You can look at it and complain and say the whole situation's against you, or you can look at it as a tool to help you force discipline on yourself. Extra discipline, so that when you get a actual funded account where you personally fund it, you'll be trained already to have discipline, because it's required. And that's the separation between who's successful and who's not. You notice that a lot of people learn the same stuff, but there's only certain individuals that succeed, and those certain individuals listen to this type of stuff. They manage risk properly. They do what they're supposed to do. They don't overtrade. They to completely remove overtrading and over leveraging. Because one mistake doing that, if you have 6 months of profitability, that one day that you allow yourself to fall on tilt because you broke the rules, can blow out 6 months of performance. And then the math can't math, right? You can't rely on the numbers to work themselves out if you're doing those types of things. And a big part of trading, the power of trading, is compound interest. But you can't allow that to be a tool for you if you're over trading and over leveraging. To be honest, prop firms are to learn. I mean, it really depends. Like if you do what some of the traders do, like they stack their accounts. There's a very strong chance for you to, first of all, lower your risk. That's why some of the most elite ICT traders that do trade prop firms, like Tanya Trades or Jade Cap, or any of the others that have proven success, that's why they stack the accounts, because they want to manage risk properly. They don't want to be over trading and over leveraging. So how do you do that? How can you make that more attainable to not over leverage? Because when you trade a 100K funded account, say they offer $3,000 drawdown for some firms, like I think Top Step, right? You technically only have $3,000, because if you trade like you're in a 100K account and your 1% is 1% of the 100K account, unless you're trying to push the issue and be a little bit more aggressive to pass the funded account, which you don't have to do because there's an unlimited time frame for you to succeed in. But if you trade like 1%, like 100K is what you have to gauge your 1% on, you're automatically over leveraging. And people don't like to hear this, right? They want to look at it, oh, it's a prop firm, I can manage 100K and I only have to spend $100 or whatever. And it's a good deal. If you know what you're doing, it's a good deal. But if you try to rush into it without thinking through some of these things and like admitting this stuff, because it's reality, ICT's mentioned it too. But if you don't think through this stuff and try to navigate using that perspective, that's why majority of people will fail. I think there's like 5% of people that pass funded accounts. The math is insane, right? And it's incredible. It's not a discouragement, obviously. It should be an encouragement for you to follow good advice, and manage stuff properly. If you want a prop firm to be a income generating asset to you, you're going to want to figure out how to stack the accounts. But you can't even get to the conversation of stacking accounts if you don't have certain perspectives and processes in place and realistic ideas in place, which is the fact that you need to gauge your risk off of the risk that you're allocated. It doesn't mean you trade like, super tiny, because obviously we want to get the account, but you also don't want to be over leveraging. That's why, if you're going to trade those accounts, give yourself at least somewhat of a buffer. Like trade with one contract, one standard mini contract, or maybe, 3 or 4 micros if, you want to do that. Break down the mini to like maybe $15 per point instead of $25 per point for like the NASDAQ. Or $50 is what one mini, E-mini for ES is, $50 per point. Or $50 per handle, right? But then you break that down, right? If you want to cut that in half, you can use micros, and then use 5 micros, which can cut the 25 or 50 in half. And so you can have a little bit more room. You can lower the leverage a little bit. But again, that'll just, your ability to succeed while doing that is going to obviously come down to your ability to actually find opportunities and manage your risk properly. So you have to actually have the skill. It'll show you very quickly that, your skill set's not where it should be in order to manage that type of experience, that type of account, and it's not for everybody. I have one student who I don't think he's even attempted a funded account, even though the opportunity's there and he's consistent. He don't like the rules, I'm assuming, so he, instead of getting a account through a prop firm, he ended up putting, $5,000 or $6,000 into a actual broker account like AMP Futures. And he's been doing phenomenally off that one account, the small account, setting his own rules, his own parameters, and having full access to withdrawals, and he's not going to lose the account if he has a bad day. But then again, he also has been with me for a while, so he knows how important risk is. So he never over leverages, never over trades. He constantly shows that that's what he's doing, and the results speak for themselves. So again, you don't have to use prop firms to be successful. Obviously, it's a good tool if you don't have 5,000 or 6,000 to put into an account or access to doing that. It is a good way. That's how I was able to build a personal account. I didn't have the money, you know. At the end of the day, I blew pretty much all my savings when I first started. I had $12,000 to work with entirely when I first started. Pretty much 95% of that was totally stolen because I didn't know what the hell I was doing within 6 months. You know, I just saw everybody else saying, oh, this is easy, blah, blah, blah. Easy way to make easy money or fast money. And I got tricked and I blew it, you know. And that was the best thing that could have ever happened to me, if I'm being honest. Because that exposed me to the risks in the marketplace and how this isn't as easy as they try to claim it to be. You know, obviously over time, when you have the right advice, when you're operating how you should, managing risk properly, having stuff that actually works, you know, the odds get more put in your favor, you know. And then of course you got to work through your mindset, how to manage the highs and lows. That's part of what I do with my students. And admit the realities. You know, if you can do all that, you know, you have the best chance of succeeding. But again, prop firms aren't necessarily the only option. Again, I have a student that does not want to do prop firms, and he's doing just fine. You know, just like you will, if that's something that you start to realize. But again, you also have to have a lot of personal awareness to be able to admit that. You know, because a lot of us don't want to admit these hard truths. Good morning, Nutty Fafa. Amazing student right there. Tony, Sufi, you guys are all amazing. Fritz, you're amazing. You guys are the epitome of the people I'm trying to attract. Chawezi. I'd like to get to know you a little bit more as well. Maybe you can hit me up with a DM and tell me a little bit about yourself. Maybe we know each other. I just don't recognize the username. But yeah, so you know, I hope this is some advice that you guys consider, because it's not only one path to take. You know, there's many different ways you could make this work for you. But yeah, I just wanted to also remind you guys, as always. Some of you guys maybe forget. I know I forget. But if you support the channel, if you support the content, you like the stuff that is provided here, and you support the channel and what I do, definitely don't forget to like the video, subscribe to the channel if you haven't already. And if you have anyone that can add to the conversation, or you know, anyone that you think can get value from what it is that we do here, definitely share the video with those that you think can either be an asset or use this community as an asset. I also have a free community in Discord. The link's down in the description for that. And I also have a private community as well if that's something you guys are interested in working with. If you want to partner with me and some of the other students. Like Sufi, he's one of my more recent private community students. And you know, he's been making strides already in the last couple of weeks, and I'm really proud of him. But yeah, so yeah, with that out the way, again, I hope you guys take that stuff to heart that I mentioned about funded accounts and stuff like that. Because a lot of people don't think about it this way. They get caught in the ambition of it all, the excitement of it all, and they don't allow themselves to think a little bit differently, to consider other routes. You know, they just think that if it's not a funded account, I can't trade, or if I blow a funded account, I'm not a good trader. You know, sometimes it's just not going to mesh with you. And you know, I really started thinking about that perspective because of ICT. You know, he mentioned this, I think, in 2022, when he was, you know, getting flooded about prop firms and stuff like that. Everyone was telling him about them, and he started laying out his perspective. So yeah, I hope that is useful for you guys to think about. But yeah, so again, we have the news taking place. FOMC on Monday, member power 3, first start of the week. Depending on what we think price is going to potentially do, we should expect that the start of the week should go against that. And, you know, after we see that maybe a high or a low has been formed for the week, we can try to gauge where that lion's portion of the weekly range will be. And then we could navigate according to that, right? And we'll work through that throughout the week as we do up until Tuesday, and then my private community, obviously, the remainder of the week. But yeah, we're going to be identifying what's going to take place headed into Fed speech. Fed speech should be treated just like FOMC, NFP, rate announcements, so on and so forth, right? Because it's one of those news events that's going to have a very volatile activity take place. Because who knows what he's going to talk about, right? Anytime Trump speaks, chaos takes place in the market, positive or negative. Whenever Powell speaks, the market is manipulated heavily as well. So, we want to make sure we stay aware of that and manage risk. Do not over leverage or over trade. It's just not worth it. You know what I mean? If you must trade this day, this is way after my time of engagement. So I won't be here for that. I'll be here for this. But, we'll see what happens. And then, of course, there's unemployment claims, which is my favorite. It's not too volatile. It doesn't not do anything, right? Sometimes it's heavy, sometimes it's not. So we'll keep our eyes on that. It's one of those more reliable news events, at least for me. You'll figure out news events that you like as you progress. That's why you want to definitely study everything, even the news events, the responses you see, whether you were able to find an opportunity or not, either hypothetically or actually, in either hindsight or real time. And then definitely keep tabs on that. It's something I've realized is very important over the last couple of years. And then, of course, Friday has nothing, right? So maybe it does something, maybe it doesn't. Because there's no news Sunday, because there's no news on Friday, because we're ahead of a Fed speech, again, risk is elevated. Friday and Sunday specifically, because there's no news, we automatically consider that low probability, possible high resistance. Doesn't mean that you take that and assume that there's not going to be anything. You just keep that in mind. So what does that mean? When these types of things are in the market and we can identify them like there's no news, it's kind of obvious, right? An obvious observation. But when you see that, you lower your risk, right? We have a very dynamic approach to risk. It's a regressive risk approach, which is if you take a loss at whatever percentage, the next trade or trades after that should be at half the normal risk you take. Every loss after that lowers the leverage by a quarter. So if you start with 1% and you take a loss, your next trade should be either 0.75 or 0.5%. And then you stay there until you make what you lost back and get back to break even. Then you can put it back to the normal risk. Why is this important? I've mentioned it before, but it's important because it manages your equity curve. So you don't have wild swings in your equity curve. Some of the best traders that trade ICT concepts have talked about them using this approach. I'll let you go dig into some of the people that I'm referring to, right? I'll let you go find them. But they're very known, and they had one specifically exploded the last couple of months, which I'm sure you guys could probably put two and two together. But he's an amazing trader, and success leaves clues. So not only has ICT mentioned this, in pretty much all of his risk models that he shares, and then of course he has a couple other approaches if you're more aggressive. But if you see a lot of good traders that succeed doing a very similar or have a very similar way of doing things when it comes to certain things like risk, it's highly advised to consider trying to emulate that. It's because they're doing it for a reason. Again, part of the regressive risk value, right, or at least value in that perspective, is management of your equity curve. You don't want to have a roller coaster ride. You want to have a very steady, losing days are not that bad type of vibes, but the winning days are, good, and you're able to take advantage of them. The only way you can do that, and also the only way you can keep your account alive, is by making sure you don't do an overwhelming amount of chaotic actions, like, risking the same percentage continuously or over trading and over leveraging. Very important stuff. It's boring stuff to talk about, but there's other things that are even more boring and mentality shattering right? Like blowing accounts constantly and doubting yourself because you just couldn't manage risk. Okay, so yeah, that is kind of the layout and some things I want to mention before we get into the analysis. But let's actually move on to some analysis, right? So there's been a lot of craziness taking place. I've been hearing that the drop in the bonds is apparently, from what I've been hearing, because I'm not like an expert as far as, what the bonds like on the back end are actually affecting, aside from the fact that the interest rate markets impact interest rates, right? They like in terms of like home loans, mortgages, anything that has to do with borrowing money and stuff like that. That's pretty much what I understand about what happens on the back end and why these are, or like the importance of these in the economy. So apparently people have been selling bonds. They've been selling the bonds, so that's been increasing the yields. It's raising the rate, right? Because they're selling it, trying to stabilize their own economies, their own currencies. Because obviously the U.S. dollar is the reserve currency. It's the underpinning of many economies. And apparently them selling bonds pretty much stabilizes their dollar, their assets. It's also a form of economic warfare if large countries like aka China or any other adversarial countries, if they want to hurt the U.S. in some form or fashion economically, they can sell the bonds because, the bonds being bought by other countries is showing that they believe in the U.S. dollar. Understanding why we have this so heavily invested into other countries, like allowing all these other countries to just buy up so much to the point that if they sell them, it'll damage our economy and our dollar. I mean, I'll never understand why that's something that has taken place. It's just like kind of giving someone the noose to hang you with, if you want my opinion. But there's a lot of things we won't know or understand as far as why countries do specific things. But apparently that's what's been taking place. That's why there's been so much chaotic manipulation taking place in the interest rate markets. And obviously that has an impact on many other assets related to the U.S. dollar and the U.S. stock market. But aside from the weeds, because that's what that is, the overall delivery we've seen obviously has been very seek and destroy-ish, at least from the higher time frame view, looking at what we see here. We've definitely been headed lower. Clearly we could see that pretty much the drop here created a bearish breaker, right? Ran buy side, created a bearish breaker, returned back into it, and then just continued to sell off. So I'm assuming that this is going to continue to take place unless deals are made, because this is an attack on the U.S. economy by our adversaries that hold a lot of our bonds, that have purchased a lot of them. Again, I don't know why there's not regulations around allowing that to take place. That seems very risky if you ask me. If they start to sell, that affects our economy in a negative capacity. I'll never understand why that is what is available. Like, makes no sense. But, I guess it is what it is. But on the back end, that's kind of what's been happening. Aside from just the market being manipulative in general, it's been used as a reason for things to go crazy. But yeah, so we've been declining in the bonds, reaching to the sell side. It did hit this daily fair value gap, and we see a pretty strong reactive response off of that. As we've talked about before, when we see large wicks, if price was to get below that wick, the fact that this large wick sent lower, then it came up, basically delivered both sides. If it gets below the low of this, that wick quadrant levels will act as premium arrays to sell, some type of bearish PD array of some kind, right? Aside from the other PD arrays that we look at. So it's kind of like one of the unlisted, right? So if it was to break through the low of that, we'd expect it to continue and use that wick as a potential balanced price range if it tried to return back into it, because both sides will be offered, and then we basically delivered away from it, similar to how we use fair value gaps, right? If they trade to, through, and then away, pretty much that area becomes a balanced price range, right? So if it goes, here, let me kind of show you an example. So, we go like this with this fair value gap as an example, and it bounces up, trades through it, trades back into it, right? It shouldn't have to break outside of it more, or maybe it wicks a little bit out, but it should be able to hold price if we're going to continue bearish order flow. Okay, so that could be classified as a balanced price range. We've been using this tactic continuously. I've been highlighting it and showing the efficacy of it and how effective it is and useful it is to see things this way throughout the last couple of weeks. A lot of we'll look through some other examples providing evidence that this tactic is very helpful in identifying not only a balanced price range and a level that should hold, but also having that used as a tool to help us continuously hold on to a particular direction and keep pushing in that particular direction. Okay, so again, the wick being large like this, overlapping candles, again, if we break through that, it'll act as in a similar capacity to what I just mentioned, right? So it's just another form of a balanced price range. A breaker is also another form of a balanced price range. That's why the mid portion of the breaker candle, right, that forms that breaker pattern is to be respected. That's why a bearish or bullish order block is to be respected, right, the midpoint specifically, because they are creating balanced price ranges. All right, that's the underpinnings as far as why things are important when it comes to breakers, order blocks, and a couple, other different PD arrays. Mitigation blocks, right? They also create balanced price ranges above or below. Okay, that's the what is an order block or what is a breaker? What is it actually doing? That's what ICT didn't want to mention, right? I don't think he's even really mentioned that live. I learned it from other charter students that kind of talked about it and highlighted that that's a fact. Something that have been there for so long. I'm sure he talked about it a long time ago, but yeah, that's kind of where I learned that from. So yeah, with that being said, again, if we get below this, we're going to continue to favor. This is going to go lower until proven otherwise. What proves that otherwise? 3 PD arrays getting violated back to the buy side. We have an inversion for value gap here. I guess we can take this off just to clear things up a bit. Just kind of mark this off as yet another PD array to use as validation for price to continue, or invalidation if it was to break through that and start to march through some of the PD arrays above price. Right, so yeah, if we go to monthly, right, we got monthly high here, monthly low, and then we have another monthly low down here to keep tabs on as far as important levels on this monthly chart. We do have a fair value gap in there. It's kind of overlapped by this weekly fair value gap, so we will actually just keep that so it's not too busy. It's pretty interesting how that has pretty much equal delivery in forming this. So again, this overlapping portion of the fair value gap with a buy side overlap and then price traded away from it here. This is now a balanced price range. If price was to return back up into it, if it would have hit it and bounced higher, pushed more to the buy side, that would have been a balanced price range bullish. But because we slid through it again to the downside, it should now act as a balanced price range bearish. If you look over here too, we have another reference over here in the same capacity that can also be dragged over as a balanced price range too. So you can imagine that if price was to start rampaging higher through these levels I'm mentioning, that would be a signal providing evidence that price may want to continue for larger, higher prices. Okay. Sufi says, couldn't be in an OTE of that range while it left relative equal highs. Are you talking about on this monthly chart? Maybe you're talking about on the weekly. I mean, yeah, we do have equal highs here. I mean, you could. This is actually, if you once you get to month 12, you'll see this thing that ICT calls internal range expansion. It's one of his favorite like modes of delivery that he takes in terms of like, you know, a model. He wants to see a high get taken if we're bearish. He wants to see price return back up, take a short-term high, sweep that, and then deliver back towards external. So we took internal range liquidity because it didn't close again outside of it. This could have been used as a breaker. I was watching that to be a breaker if you go back to some of the videos. But of course, price ended up violating that. And as a result, price is still rampaging to the sell side. So yeah, because it came through that, you could classify it as a possible optimal trade entry in some capacity. I mean, you could see clearly from hindsight that did work out. We couldn't have been able to gauge that entirely because of what's been taking place. It's kind of just been thrown all over the place because of the geopolitics and economic adjustments. But yeah, I mean, this could be reasonably identified as a optimal trade entry. I think you can even use, I was going to say that you could have used this one too, but it didn't. This is a beautiful example here of what I was talking about with the balanced price range, right? This fair value gap was overlapped here with this delivery. So when price came back to it, what did it respect if it was to continue going lower? It respected the midpoint of that overlapping price delivery. Okay, so price respected that. Couldn't even get to it. So that was an indication the price was going to continue going lower. If you go back to this time frame over here, I talked about this live. I can't remember if I did it on YouTube, but I for sure did in my private community. You know, this is something that is extremely helpful. Those of you that haven't implemented this tactic, and maybe this is the first time you hear it, or maybe us just talking about it the last couple of weeks has been the first time you've been exposed to this concept. But this is extremely powerful and you can see there's many different ways that it shows up. And all of them can allow you to trust things. Remember, this is all focused on building trust and clarity in the marketplace. That's the whole purpose why I'm going live, is to build that skill set of clarity. Because then from that point on, you can then offer yourself potential consistency and trust in whatever it is you're trying to do. Because that's one of the hardest things to build as a trader is trust, because everything's probabilities. And even with these skill sets or tactics, you still got to consider the fact that everything is based on probabilities, you know. But yeah, going back to your question, Sufi, you could classify that as optimal trade entry. If that's what you see in price, don't let me take that away from you. Because clearly we can observe, if we go from this high to that low, because this is the one that started that. Now, let me make this clear. If this would have closed outside of this high and used this as a bullish breaker and started pushing higher, then obviously we would then switch to this low to that high, because buy side's taken, sell side's taken, and if we can see that it confirms that it's going to continue in that direction, our range now changes from using this sell side range or sell side anchor points to then buy side anchor points to seek buy side. That's a bit of a advanced concept. What I just mentioned is like navigating the moving premium and discount delivery. Let me fix my camera real quick. But yes, it's a little bit of a advanced concept with the moving premium and discount. It's something that obviously requires a good amount of understanding with other layers of navigation of dealing ranges and stuff like that. But yeah, I mean, again, if this is what you saw, right, and it was an optimal trading tree, and for whatever reason you trusted the fact that it was going to just take the high and go lower, then that is obviously something I don't want to pull you away from, because clearly it was in the market. We had a red flag here, which was the bullish breaker that failed. But again, because this failed and didn't hold, we're able to just continue to seek sell side. And then again, another breaker formed. So similar to what I was talking about the large wicks. Let me see, where was I at? With like this large wick here, how this wick, if price trades below it, it should be able to pull back maximum to the midpoint. If it violates further, it's kind of going to be invalid. It may look to go higher. But that concept is also seen with this, right? So this breaker, right? Or, you know, you could look at this as a breaker, or just like an invalid, like a, what the hell is the word I'm looking for? This wick trading lower as a balanced price range, whichever way you look at it, you know, this can also be used as a balanced price range, okay? Similar to what I just mentioned here, right? With this large wick, it's also seen here on the weekly chart, okay? So again, this breaker candle should be allowed to hold up to the midpoint. And isn't it ironic that that breaker candle that we outlined is also a large wick that overlaps the fair value gap? So if price was to pull back into that level, first of all, this fair value gap here should be able to act as a balanced price range in itself, right? But if it was to pull back a little bit deeper, right, this midpoint of this wick, and, you know, overlapping, it's also a breaker, should be able to hold in the midpoint. If you start to see price go against those levels, clearly that's an indication that validation points are not holding for price to go lower. Things may start to adjust. They might be changing. So then you can start to consider reliably adjusting to now bullishness instead of bearishness. Otherwise, if this stuff stays intact, I don't give a shit if it retraces. I really don't care. Okay, I'm not going to think that price is going to be bullish just because. You know, sorry for my language, right? But at the end of the day, you know, this is something that gets overlooked a lot, and the flip-flopping hurts my heart when I see traders that identify things and they just do not trust the higher time frame. And they're, because I remember when I was so stuck on the lower time frames, and it would completely crush my morale. When I look back on things now and I see that I was in line with what I needed to do, I just wouldn't allow myself to submit to the fact that narrative doesn't change dramatically. This is the situation in price that made me think about breaking apart bias and narrative, making them separated. Because if you classify bias and narrative as two different things, you're able to easily force yourself to stick to the higher time frame direction on this weekly chart, but then you're able to comfortably navigate a retracement within that higher time frame weekly narrative when you're looking at the lower time frames. So if price was to come off this low and start to retrace, your whole opinion is not going to change to bullishness until, like what I said, these levels get violated. You'll be able to navigate that as, or start to navigate that as a retracement, just going against things. And then, of course, having that separation and awareness to the fact that both those things are different, you're able to then gauge your risk properly. Because counter trend trading, how do you know you're counter trend trading if you don't understand this type of stuff? You don't know. You just think that there's a turn in price. So are we bullish maybe more long term now? You know, you don't allow yourself to have that separation. And then, of course, the comfort in navigating one side plus the other. You know, and, you know, maybe you don't want to trade counter trend. But if you're able to identify it, you're able to trust in the fact that, you know, okay, price is retracing to a particular level. Once it hits that higher time frame level, I'm then able to get in line with what I'm comfortable with, which maybe that's trend trading. Maybe you only want to trade in the direction of the trend, and that's totally fine. But what I teach, right, what I highlight, obviously I'm not the founder of any of the concepts. You know, you gotta first of all give all glory to God, and then ICT, you know, because he's been gracious enough to share this with us. But from what I've understood, this is what's helped me navigate both sides, which I've proven continuously the last 2 weeks, which has been for a lot of students incredible. I've seen them get a lot of aha moments from that. But the separation of this allows you to really navigate both sides, or to start walking down that path. And then, of course, if you're on the other side where you don't want to take counter trend trades, you're able to then frame out and sit out, know when to trade, when not to trade, right? Depending on your approach, when you're able to navigate whether we're in a retracement, or identify whether we're in a retracement or in a part of the continuation of whatever narrative you're inside of. Before we move on, does what I've mentioned so far make sense? I know to some of you guys it makes sense. We have 7 people on. I know that at least half of you guys understand this because you've been with me But I want to make sure that those who maybe are new, I want to confirm whether that makes sense or not, so I can know if I can know if I can move on and not leave anyone behind. Okay, Fritz, it does make sense. Sufi is at SMT. No. If you're talking about the higher time frame swing here, yes, we've been talking about that SMT for the last 2 weeks for sure. But yeah, if you're new here, or maybe this is like the first couple of calls you've been on, maybe you didn't hear me talk about what I just went through in terms of like counter trend trading and stuff like that, definitely let me know, because again, this is for you guys. I'm not just talking to hear myself talk or just to talk to a echo chamber, to those that are in the know. I want to get everybody that follows me and supports me on the same page, because a lot of this stuff is non-negotiable. All right, Chawazi makes sense. Okay. 95 Fritz, Sufi makes sense. So yeah, half you guys so far. But yeah, and again, if I move on and, maybe there's some of you guys that aren't comfortable with leaving comments, maybe just DM me if you have any questions. Save your question, and then I could talk to you in more of a private capacity. Because again, I'm here to not leave any of you guys behind. I'm not here to build some type of egotistical nonsense. I'm here to actually serve you guys and provide, so you guys can get to a point of clarity. This is an amazing industry. It's completely revolutionized the way that I even look at life. And it's, from what we've talked about, it's helped so many people. And I just want to make that increase. And of course, part of that has to do with focusing on you guys, not just what I want to talk about. I could do that all day long. I talk about a lot of the stuff I want to talk about in the private community. But again, even the private community is very much leaned towards that. Same with the free Discord, and then of course this YouTube channel. So again, if you have any questions, either DM me or just voice them in the comments. But for now, I'm going to move on. So again, Sufi did just mention that there's SMT here at these lows. We have been talking about that. That's what kind of led to this rally up. So we were ahead of that as price was moving higher. If you go back and look at some of the videos, for those of you that weren't here. So we've been able to navigate all this up to the upside, and then now back down to the sell side as well. So yeah, just to answer your question, Sufi. So how many bullish PD arrays do we have on T-bond currently from monthly and weekly? Are you talking about that are impactful for validation and invalidation? Are you talking about like what specific ones are we looking at to do that process, or just as a whole entirely? Because if it's as a whole entirely, we have the wick, so that's one. We have the weekly inversion for value gap. Of course, we got this breaker that's kind of overlapping the overall large wick. We have the bearish order block here. I mean, you can even look at this wick too, right? We want to study how price is going to, excuse me, how price is going to behave with that. So I mean, you could basically, you could add that as well if you wanted to. It's not like this one, but it may leave an impact. If it refuses to get up into these levels and just continues to dump, then obviously that was something important. So what is that? 1, 2, 3, 4, 5 PD arrays. And then of course to the downside, we have the lows. We're inside this order block. So again, opposing PD arrays, given the fact that we've been bearish, opposing PD arrays can form retracement areas in price. So if you're bearish on the weekly or daily chart and you see a bullish PD array like this order block getting tapped into, maybe on like a Thursday or Friday, and price was really aggressive like it was, that's going to stimulate or encourage a retracement, right? But again, depending on what the narrative is, maybe it turns into a full-on retracement, right? Or a turnaround, reversal, right? But until that's proven, right, with these 3 PD arrays getting violated, this opposing PD array is just triggering in a retracement, as you can see. And if the week is aggressive and it pushes into an opposing PD array like it did here, that's how you can also get in front of or reasonably anticipate a Thursday, Friday reversal from that higher time frame. Okay, that's something very, very powerful right there too. I talk about that a lot In terms, at least for the last couple of months, I've been really hammering home the overall like counter trend idea. And then of course I've been, I guess more in my private community showing how that's, how navigating both sides is a possibility while still keeping intact one direction. But yeah, that's something, if all that makes sense, I hope it makes sense in terms of counter trend trading and how to navigate that. But if that in some way doesn't make sense, let me know. Again, either here in the comments, the chat, or in a DM. I'd be happy to, again, assist you guys on a more personal level. That order block and the wick from this month, both inside a big order block on the monthly. Yeah, you see that kind of overlapping behavior. Obviously, we'll have to see what that wants to turn into. Again, until something's proven that we're going to turn around, we've been in an overall downtrend. So again, it's the same thing across the board when you're on like the higher time frame or lower time frames when it comes to validation and invalidation. For the monthly time frame to change overall narrative, we still need 3 PD arrays to get violated. We could start to see earlier signs of that taking place as we break things down on the lower time frames. But again, this is on like a huge time frame. There's only 12 monthly candles that take place in a year, right? So that it's a good thing to identify, right? Like this bullish order block instigated the retracement here. It's been used a good amount of times. One thing to mention, the more times that we tap into a bullish or bearish order block or any other PD array, the less likely it is to hold in price, right? Sometimes, obviously, there's a handful of times that turns off, right? Like that doesn't get followed. But majority of the time, the longer time we spend, especially when we're taking entries, the more time we spend at a particular PD array, the less likely it is to want to hold. Because what are they doing when they're doing that? They're building liquidity, building sentiment, continuously trying to make it seem like it's strong support, strong resistance. And then eventually they get totally obliterated, right? And we can see we're kind of in a huge range for the interest rates. They've been having a hard time the last couple of years. So, we'll see. It's a good observation. Write that on a notepad or something. And yeah, Sufi, the shield gets weaker. That's for sure. But yeah, I mean, you could keep things like this, Fritz, on a notepad so you don't have to constantly think about it. But if price was to turn around and start changing state of delivery, maybe getting above the breaker and the weekly fair value gap I mentioned, then you can start to confirm whether that's going to be helpful or not, whether it's going to, provide impact or, just not really get respected. Right. So, yeah, that is our opinions on where we think the bonds are going to go. I'm assuming that the downside is going to continue unless something fully changes overall with like deals being made and maybe they cut or increase rates. Who knows? But unless something big happens, I'm going to just continue to observe this as price running the stops. Notice how this balanced price range also not only was effective here as well, it couldn't break out of that. So that's an indication that it was not going to go higher. It respected this, violated the breaker level, and then now we've shifted market structure. So we have done 3 things that promote sell-side delivery. And now we also have on a second layer, right, the second layer of things, we have the down wick, the breaker, this other inversion fair value gap, and prices really declined. So we'll see what happens. Maybe it's going to continue to be bearish. In that case, the next week may present us with a bullish candle to try to get us up into here, or maybe it just wicks up into there, then starts to continue the rampage down to the sell side delivery. We've taken buy side here, taken sell side overall, so this will be our new range. Let me actually. So we're not going to use this high to that low anymore because now we've delivered well away from that, and it seems as though we're going to be bearish. So now we can observe this range and get a premium and discount, right? So notice how the delivery happened here, aggressively pushed away from the equilibrium. So, we'll see what happens. It shouldn't have to get back up into the premium because we have the balanced price ranges and different pools of liquidity up here and PD arrays that should be able to stop price from needing to get up there. We'll see. Obviously, I'm going to assume that that's going to be the case, though. So this equilibrium should not get traded back to, simply because there's a lot of different areas in price that should be able to hold it. Now, of course, could it happen? Yes, right? Anything can happen. But given what we see here, I'm more on the side of price continuing to give us reasons to short and aim for the sell side low down there. So unless that changes, what changes that, right? 3 PD arrays we just mentioned getting violated to the upside. But if that stays intact, obviously we'll continue to seek the sell side and favor downside delivery in the bonds. So now, with that being said, hope that is fully understood. But we will now move on to the yields, which again does the opposite. So again, just to reiterate, right? Bonds generally influence heavily what the foreign currencies are going to do and what the indices are going to do. There's been a cracking correlation because of all the crazy announcements, which is totally understandable, right? It happens. At some point, things will kick back into symmetry, though. Okay, so when there's a huge lack of symmetry across the board with certain assets, when it comes to our risk on, risk off analysis, that shows you that things are being worked on in the background. There's heavy manipulation and moves being made in the economies that are taking place. So what does that mean? That elevates the risk profile of the market that you're engaged in. So what does that mean? That means that you lower your risk. We've been talking about this for weeks. I haven't once taken a full 1% throughout the last 3 months because this has been the case. Things have been chaotic. There was an expectation of a lot of chaos. So what does that mean? You got to lower your risk when you're able to anticipate this, whether you like it or not. And if you don't follow this understanding, which is what the professionals are doing, then you're breaking the rules and you're not managing risk properly. Obviously, if you know what you're doing, right, and you're confident in some of the things that you're trying to engage in, if you're open to being more risk, your risk tolerance is increased or a little bit higher than the normal person, then sure, you got to be able to have the maturity in your mindset and experience in the market to allow yourself to do that safely, and know for a fact that if you do take a loss, knowing that you're intentionally going in there and not really caring about the volatility, that if you take a loss, it's not going to break you, because you could bend the rules at times as long as you know what you're doing, and you know that if you take a loss, you're not going to doubt yourself and spiral out of control, which many do, unfortunately. But again, that's like a very, it's a mindset that most new traders have. That's why it's highly advised, at least from mentors that know what the hell they're doing and want success in their students. It's highly advised that you keep your risk managed early because you want to have the opportunity to grow. And if you don't give yourself that chance, you won't be able to have these other conversations because you won't arrive. You'll just continuously boom and bust yourself. And, a lot of people quit as a result of that, which is unfortunate. But again, as you mature, as you grow into the trader personality you're trying to become, obviously you'll be able to figure out, different adjustments you can make. But that's a personal experience. It's not something anyone that knows what they're doing as a mentor should force upon their students. Because what works for me, which, most times, if I see something that works with me, I put 2.5%, right? And that's not something I promote. I don't even ever talk about it, because it's not something I encourage you guys to do until you are, adequately prepared. And that takes time. But of course, certain students that reach the level of consistency and confidence that they're aiming for, obviously those are conversations we can end up having. But that's not a conversation for everybody, especially when you're just learning. It's actually a huge hindrance because if you take a 2.5% loss and you're not equipped mentally to deal with it, you don't have the confidence yet, it can be a death nail to your success and your overall mental capital as a whole. It may take you months, maybe years to get over. And that's why I talk about risk the way I do. That's why ICT talks about risk the way he does. Definitely, I always want to keep this stuff at the forefront of our minds, in terms of risk, right? But again, there's different levels of risk. So you need to identify where you're at and take the advice that's applicable to you, which in this case is managing your risk properly for the most part. Don't put over the top risk exposure right now. because we're in a very hard environment. It's very tricky. It's very manipulative. And how do we know that? Just simply off the fact that there's a huge crack in correlation between foreign currencies, and there was at least a huge crack between the indices and the bonds as well, right? So yeah, we'll see if that changes. If this continues to drop and we still see the NASDAQ continue to drop and the other indices drop, obviously it'll be showing us that we're kicking back into symmetrical markets, which is amazing. And should be even though the risk exposure is still going to be pretty high, or risk that's in the market still pretty high because of the uncertainty, we may see more reasonable ideas that are supported by multiple confluences that we like to see in price, versus just relying on the technicals, which has been a lot of the case up until this point. But yeah, so again, bonds impact what the foreign currencies do for the most part, and what the indices do. We talked about that, so we're going to move on to the yields, which in the overall grand scheme of things heavily impacts what the DXY does. Okay, if this is going higher, the DXY should go higher, right? So if the bonds are going lower, then the indices and the foreign currencies like GBP and Euro should be going lower, right? Like that's in a perfect world, that's what should be taking place. And then a lot of times we can use that very effectively. But when things are cracked like that, you lower your risk, right? As a baseline, you lower your risk, and you heavily depend on correlated assets opposed to this, right? You sideline the bonds and yields for a little bit, and you would just use like the 3 indices and the DXY if you trade the indices, or you would use the indices DXY to also confirm for the foreign currencies, while sidelining the bonds and yields if there's a crack in correlation. Simply seeing that crack in correlation, though, if you're trading a particular asset, you should automatically put a huge stamp on your in your trading plan showing that, hey, this is a higher risk environment. It's heavily manipulated. That's what that means. Big money, smart money is manipulating price in some form or fashion in a more large capacity. Large moves are taking place on the back end. All right, so that's what that represents. Okay, so moving on to the yields, like I mentioned, again, this impacts what the DXY does, and it has a reverse correlated effect to the foreign currencies and the indices. Okay, so that is the simple relationship between the interest rates and the assets that they impact, and that's why we start here every week. Every single call I've done for the last 3 years has always started where we start. So just to highlight, first of all, the repetitiveness and systematic way you can do your analysis, but also to highlight the importance. These are important. You start here, you work your way up to the indices like we do, and you start to build a very strong back-end sentiment and fundamental overall technical analysis to then layer on top of your opinions that you have when you break down the asset of your choice. And again, that's where trust and clarity start to really unfold. And then over time, you start to really build confidence as a result of that, and me saying it opposed to you going in and actually applying it, they're two different things. So again, I could sit here and talk all day long about whatever I want to talk about, but if you don't go and apply it and take screenshots and then compare and contrast on a weekly basis, you completely lose the plot. You lose all value that there is in watching these types of videos. So I dramatically encourage you to always take screenshots of the start of the week, the start of the day, keeping in mind the things that we talk about here in terms of process, and then compare and contrast on days like this, on Saturday and Sundays, when the market's not printing, and pull out observations based on some of the things that we talk about, and study the relationships and how things operated throughout the week. And if the indices or whatever asset you trade went higher, what did these other assets do as a result? Is there a way that I can use that information to confirm in the future, like my trust behind this type of analysis? And what do I do when things are cracked in correlation? How should I talk to myself about what the environment is? And then as a result of that understanding, how do I operate my risk? Review some of the times you took losses at times when a lot of the opposing things have been taking place. Maybe you traded during CPI, FOMC, whatever news event, and there was a huge crack in correlation, right? When did you take entries? Did you take it before the open price on a daily basis, right? These are all pieces to weekly and daily analysis or review that you want to consider if you want to grow, because you can't just look at a chart and just magically figure things out, or listen to someone talk and magically figure it out. You have to go in, just like in school. School's kind of ridiculous in the United States these days, unfortunately. But if you want to pass tests and you want to do good on a subject and you want to learn the most, there's a reason they have homework. There's a reason for these things, because you got to build that muscle memory. Trading is no different. Just like every career is no different. If you want to go to college and be a doctor or whatever, you don't just read a book and magically know. You have to have hands-on. You have to figure out how to gain experience, do labs and, all these different things. I'm not a doctor or anything, never been to college, so I don't know. I'm just, I've heard that that's kind of how things are. But if it's that way with, high-level skill sets, outside of trading, why is it to be looked at differently when it comes to trading? Why do people think differently about this skill set? They shouldn't. It's no different. If you want to be a master at something, you have to do these types of things. Because there's a skill set, which is what we talk about, process and all that different stuff, and then there's experience. You have to have a vast amount of experience in both, doing both, applying both. And then, of course, that leads you to mastery, and mastery takes time. Overnight successes generally have a large amount of time put before they became a overnight success, unless, of course, they won the lottery or something, right? Because then that's kind of just like random, it's a bunch of random stuff. But yeah, so with that being said, again, we'll come back to the yields now. So if we look for the bonds to go lower, we want to try and see the yields go higher, right? Start to confirm that. Just like how we have SMT on the bonds, right? We have this large SMT that led to this rally. We don't really have much of an SMT at the highs. Maybe if we zoom out a little bit, we could find one that led to the drop. And we didn't really see any SMT that led to the drop. We did see SMT here at these lows that led to the retracement higher. But for the yields, we have SMT at the lows here, which I've been calling out and saying if they were to hold and we were to get above this weekly inversion fair value gap, it would then send price higher. If you go back and look at some of the videos I've done recently, because again, don't take my word for things. I come here, talk about things, but I'm constantly showing many things over and over. That's why the private community students that I have stayed for years. Like if you look at some of the reviews from some of the students that made reviews on my the WAP page or whatever, the landing page, they're from 9 months ago, a year ago, 8 months ago. They stay for a long period of time. A year's not long, but they stay for a good amount of time and they get to experience the impacts. Because if you spend like one call with me or anybody else that does this type of stuff, you're going to miss the point. You need to be able to validate things over time. And of course, if they're not going live and showing you that they can do a live and calling it, you shouldn't listen to them. I don't care if they have a Lambo. They're wasting your time. And, you're putting faith in someone that you don't know, right? You don't know if they're able to do anything or not. It doesn't matter if they show you the money or not. What matters is if they can call the market. That's what matters. I could show you my $5,000, $10,000, $20,000 days. That's not going to help you. It never does. That's why I rarely show dollar amounts, and maybe 3 or 4 times a year, just for students that do feel that's a breaking point for them. And I understand, I needed that too in some capacity, but that's why I show it. I don't allow that to be the main focus though, but again, it takes time to validate whether these things are going to work for you, especially since we are on such a high time frame. But again, the concepts we operate within on these time frames dramatically help on the lower time frames as well, which, those of you that have been here for a while, whether in any capacity, you guys have seen the importance of that, right? And how useful that is, because it's all the same. Everything's fractal, right? Not like a fractal pattern, but They're fractal. Everything we use here is applicable on the lower time frame, seconds charts even. But again, we see the yields going higher, bonds are going lower. That should, at some point, turn DXY higher, if that's going to continue, obviously. And then it should also end up in the indices continuing a march lower. Ideally, that's what should take place. But because there's somewhat of a crack in correlation, or there has been, again, that may start to change. It's pretty ironic how the yields are exploding to the buy side. The bonds are now finally exploding to the sell side. And we see that the currencies have blown out significant buy side liquidity, and may end up turning around as a result, falling in suit with the bonds. And then we also see that the overall indices are also, seeming like this was just a retracement. We'll obviously see moving forward. But then we also see at the same time all that stuff is somewhat kicking back in symmetry potentially. We see that another significant liquidity pool has been violated with the DXY as well. The issue I have with the correlation, maybe potentially kicking back in line. The issue I have with that is the fact that what's taking place in the U.S. economy impacts all assets, all U.S. assets. That's why they have all been dropping. When the bonds are, when the bonds were going higher. At that time, they were all still dropping, and they're still doing it, right? So obviously, we'll see if that's going to change. But, we're going to, given what we see, we're going to stick to this potentially going higher unless there's something that proves otherwise. I do see that there's a bearish SMT here, so maybe that will send price lower. Maybe the bonds will end up turning around and going higher as a result. But until that's proven, 3 PD arrays getting violated, we're just going to stick to bearish bonds, bullish yields, kind of put those on the back burner if they're not going to be helpful to the overall delivery. Maybe we continue to see the currencies go higher. Maybe we continue to see maybe this high break and this huge turn in the indices. Maybe that results in price maybe looking to seek some of the buy side up here, which I wouldn't think is unreasonable. It's not going to drop entirely. The U.S. economy is very resilient. So again, because there's somewhat of a crack in correlation between the bonds and the indices, we're just going to keep that on the sideline, keep note as far as what's taking place. But we're going to heavily depend on like the currencies, DXY relationship, and then the 3 indices to do our analysis and confirm or negate a particular narrative, right? So again, everything I talked about with the bonds basically is similarly applicable to the yields. You can see how they're pretty much identically reverse correlated. Like the DXY and Euro USD are, right? They're completely inverse. It's the same with the bonds and yields. That's why one impacts the currencies, foreign currencies, GU and EU, and the indices, and this one specifically impacts the DXY, right? Just backs up that overall relationship that those assets have with one another. Okay, so again, everything we talked about for the bonds, we'll be able to apply here with the yields. And then again, there's a SMT up here. So we'll see if that ends up turning price around. But just like with the bonds, how I need 3 PD arrays to be violated to the buy side, I need 3 PD arrays here on the yields to be violated to the sell side. Otherwise, I look at this as a bullish breaker, and I'm going to stick to that until proven otherwise. Okay, but again, there's a shady relationship going on between the bonds and yields versus the other assets. So we're going to keep our eyes and finger on the pulse of these assets, but they're not going to dictate what direction we want price to go in until we see clearly that things are back in correlated effect. Okay, so again, we have volume imbalance in here. We have a fair value gap in here. I think I'll move this up so we can use this as one of our 3 PD arrays to the downside. Okay, for this weekly chart, we have this bullish order block as well. We also have a fair value gap in there. We have the wick and we have this breaker. So if price was to seriously smash through these levels, that's what would turn off my interest for this to go higher. And then obviously that if that takes place off the heels of this SMT we have identified, then obviously that will fall more into a level of importance than it does right now, because price is going higher. So unless it's proven that it wants to go lower, I'm going to assume that this run on stops is just something that's, they purge liquidity. Now they're retracing. Maybe they're going to use that as a opposing PD array to, set up another buy off of a retracement. So that is my assumption here. So bearish bonds, bullish yields until proven otherwise, till our levels of invalidation are violated. I move to the currencies. If we go to the monthly chart, for those of you that, let me go check something. What is your line in the sand for the yields on the daily? So I'm going to go more off of what the weekly chart looks like, because remember, the daily chart is subservient to the weekly chart, just like the weekly chart is subservient to the monthly chart. So if I want this to change entirely, more long term, I'm definitely going to want to see this lower weekly fair value gap get violated, because if that takes place, then obviously we got to look and see how this behaves and stuff like that. But if that takes place, my eyes are moving attention down to here. But if we go to the daily chart with that being identified, right, we can take those into consideration and then see what we can also use in conjunction with that as we move to the daily time frame. So we got this bullish order block. Okay, we still have this breaker, so that breaker is still valid as a validation point on the daily chart opposed to the weekly chart. You could see how that breaker, the upper candles highlighted on that weekly chart, is also being respected right here on the daily chart. So we have a bullish order block here. It's not fully going to be used as a PD array that can be used with validation and validation yet, because it didn't break through the high. So it's technically not fully applicable just yet. But opposed to that, again, we have this weekly fair value gap. We have a swing low, and then we have that breaker candle. Okay, you can also even add this in here as well. This pretty clear inversion fair value gap. So again, if it was to violate this, that's why I say this weekly fair value gap is a line in the sand, because it also translates to the daily, as you could see. That's kind of the power behind identifying things on the weekly. This is a good study, by the way. Go to the weekly chart, find your validation and validation, and then drop down and see what levels in the daily chart can also be used in conjunction with the weekly invalidation levels. See if they line up, because most times the line in the sand on the weekly will line up with the line in the sand on the daily chart as well. The daily just might start to show you a little bit of like pre-game signals that the weekly levels may start to get attacked. All right, that breaker is just at the equilibrium of the range. Which range are you talking about? Are you talking about from this high to that low? So because we took sell side here, right? It ran sell side, and we took buy side. This range now becomes insolvent. So because sell side's taken here, buy side's taken here, and we are assuming the price is going to go higher still, this is the range that we now want to operate within. So, oh, okay, wait a minute. Yeah, you're right. You're actually right. Never mind. Scratch that. I didn't realize that. I didn't put it up. Thought you were aiming from here to there for some reason. But yeah, you're absolutely right. You're 100% correct. Right? So again, because this breaker's here, there's really no reason for it to want to even reach down to the optimal trade-in tree. Good job, by the way, Fritz. You're way ahead of me, brother. So yeah. Again, a breaker creates a balanced price range. Okay, so again, if it was to get below this weekly fair value gap, that's already our line in the sand for the weekly upper time frame validation point. Right? So if it was to then continue to violate into this breaker and not treat it as a balanced price range as it did here, meaning that the midpoint of the breaker should not be getting violated, whether you use from this low to there to encapsulate the entire run higher, or if you just use the last up candle like I did, which generally can be used, or you just use this large wick up here, because this whole area can be the potential breaker that's up candle. Because this is a large wick though, again, the wick rules come into play. So that's why I'm using the wick. If you wanted to, it wouldn't be unreasonable or incorrect for you to use the actual candle there, the whole entire candle. I'm just using the wick. And once we drop down to the lower time frame, daily chart versus the weekly, you can see how that principle has also been highly effective, a little bit more close to price as well. And you can see the midpoint rules staying intact, right? Midpoint was beautifully tapped into. The breaker pattern mixed with a fair value gap that's in the upper portion of things. This one has zero chance of getting attacked when there's a breaker because, again, the PD array matrix seeks the breaker first in the list of liquidity or PD arrays that it likes to operate within. Again, we can get into that conversation later. I think I've talked about it. Those of you that are in my private community, I have a video about that. So if you haven't dug into that and this doesn't make sense, or maybe it's a sticking point in terms of like what PD arrays come before the others, definitely go dig into that in the mentorship video section. But yeah, you can see how this was left because the breaker comes first. If you see an order block or a fair value gap with a breaker pattern, if it's far away from that breaker, it's going to stick there and not do any type of delivery down there. It's going to act as a breakaway gap. There is another scenario that provides you breakaway gaps in price, right? Just leaves them open because of that reason. But yeah, so again, that is my opinion here on the yields and the bonds. So we got through that. Yeah, so mitigation block and breakers are used in the exact same way. They're kind of the same. Mitigation blocks and breakers don't generally operate in the same capacity. Maybe there's a breaker and a mitigation block on two separate correlated assets, but breakers and mitigation blocks, there's going to be one or the other because they are the same pattern. It's just the breaker runs the stop and then takes off versus the mitigation block, which fails to run above the high, because most of the time that high that's created in a mitigation block before a failure swing, it's presented like that because it punched into a PD array. So it doesn't have to run the stops. And that high generally is a high that takes a stop. So it doesn't have to come back up there and run it out again. And again, generally that is nested inside of a higher time frame PD array. Does that make sense? If not, I could do a little diagram real quick before we move on. I have a video about that as well, Sufi. I believe in the mentorship calls. That was a question that I got a lot. What's the difference, right? How to use them. I actually have a diagram too in the breaker section where I talk about breakers and stuff. There's a really, really, really clear, hopefully easy to understand like template you can use that identifies the difference. I also have one that identifies the difference between a breaker and the YouTube model, the 2022 model, and how you can see the YouTube model being nested in higher time frame breakers. Like maybe there's a 1 minute YouTube model that delivers inside of the bearish breaker or bullish breaker, one or the other. That's a very strong concept that I use too. And I talk about the overlapping effect between models that ICT teaches. And, that's why the argument ICT makes talking about, you only need one model is so valid, because a lot of times many of the models are performing within one another. Many of the PD arrays are nested inside of one another, so it's a very interesting concept. But yeah, I hope you guys understand mitigation blocks and breakers, the difference. If not, maybe after we're done with this portion of the call, I will dig into that order. So yeah, so I hope the yields and bonds make sense. Moving on to the currencies again, we see how there was this BPR here I talked about, right? The overlapping fair value gap. This is the monthly perspective. But if we go to the weekly perspective, we could see how this BPR, I've been talking about this the last couple weeks, to be honest. The fact that this huge fair value gap overlapped this fair value gap created a balanced price range. I said if price was going to continue going higher, it's going to leave that intact and then continue to rally above that. If it breaks through that, price would then look to want to seek sell side delivery. And we can beautifully see how that has been fully respected. I did give a little dive lower before it rallied up, but there was S&T at the lows in that regard, which we talked about. So that was something that, again, was at the forefront of our analysis and came to fruition. Notice how the monthly fair value gap stayed above, right? It closed above. It did not break through, okay? It was very much left intact. The delivery going through that, though, again, if you don't understand the things that we talk about, if you're not as detailed as us or don't have the experience that we have here with these concepts and certain understandings, you would have most likely thought that this is going to now change and price is going to be bearish. And little did many know, price was going to turn around. We had the anticipation that it was going to turn around and never thought shorts unless it was going to violate these areas. It's just a luxury we have with the overall validation and invalidation principles that we operate within, right? So yeah. So it looks like the low and the open of that breaker could be to the tick. Yeah. Oh yeah, 100%. 100%. Yeah, we were talking about this breaker too. Mind you, a breaker is a balanced price range in itself. Notice how if you take this from the high of the breaker, that's these up candles to the low, take that, price did not even get close to the midpoint of that breaker. It just kept delivering balanced price ranges all the way through, delivering back and forth, and then of course exploded through there, which is highly impactful for us to want to go higher there. Notice how it hit an opposing PD array, fair value gap. Okay, hit this fair value gap. Right, this here was also a balanced price range when it delivered through the low. So what do you mean? This, or what do you see in price? There's a breaker here, a large wick. So what happened? It respected the midpoint as it declined, right? Never attempted to get back up here. First of all, because this was a valid breaker and break in market structure. And then of course this created a balanced price range, right? So all in here, once you saw this, and then of course confirmed even further once you see it breaking through this low, there's no reason to have been bullish at that moment, right? And I believe way back then at this time, with my private community, we were talking about this, okay? We were in front of this, right? Because this stuff happens over and over, and it repeats over and over and over again, all right? But this is, again, a hugely important thing. That's why I've been really pressing into this, this concept. That wick on GBPUSD weekly looks like algo just came, turned to OTE, supporting this out. Yeah. So the wicks do the damage, bodies tell the story. Clearly the bodies told a very, very clear story. And then of course there was also coupled with the S&T at the lows between Euro and GBP. So again, we have not been looking for any downside delivery in the GBP USD or Euro USD, even though we've seen the cracking correlation between this asset and the indices. This is one of the assets that was actually in line with what the bonds were doing, so the bonds were supporting this run higher. I wouldn't be surprised though if we do start to see, given the fact that the bonds are tanking, I wouldn't be surprised if this ends up turning price into a downside delivery. Obviously that's not in the cards just yet. We do have S&T here. If we take off some of that on this weekly chart, you see that we have an S&T between these highs. And we also have an S&T between these highs. So we'll see if maybe this was just a run to the buy side for price to then look to want to have a rampage to the sell side. Maybe they set these equal lows here, and maybe they want to look to revisit down into this area. Another thing here, let's point it out again. Let's point out the concept again. If we look at this, okay, let's actually maximize this so I could drive this point home. And then we'll move on. So yeah, you see this portion, as this price action was moving higher, it violated through it, shifted market structure, ran stops, but left an overlapping fair value gap and a fair value gap here as well. Notice how it left this as a breakaway gap. Never came back into it, right? So if we fast forward also to more current price delivery, if we look at this, right, notice how price continued to respect this as a balanced price range, right? It came to revisit it, couldn't even get back to the midpoint of that. If you just highlight it right there, right, you can see this overlapping view continued to hold in price, even through this huge retracement that then led obviously to price going higher. This entire move here was all just a return back to optimal trade entry in the large grand scheme of things, and price just exploded again. So again, and then we created the balanced price range here. So you can see how the rolling observations of balanced price ranges, and you just being able to understand this concept, you can see just how much clarity and assistance it gives you to hold on to a narrative or trust something, and how if this concept is disrespected, you could then start to validate or invalidate or adjust your ability to engage price delivery from one side to the other, or just to continue to validate and push further into whatever's taking place in price action. Right? You can see, like, this is such a valuable piece of information. I never really was teaching it on YouTube. I was a lot of times just teaching it to my private community students. But again, it's not something that ICT has never touched on. It's just something that he never put full attention on. He put pieces here and there, as he always does. But again, it's something that is a really, really solid pillar to the overall analysis and understanding as far as whether something's going to continue or if it's going to start invalidating things in price delivery. Okay, so yeah, I hope that makes sense. So again, we're going to continue to try to see this go higher unless, of course, if we look at our 3 PD arrays, we have this fair value gap. Okay, if we're looking at just this time frame, we have this low now to watch. We do have SMT, so we'll see if that's going to lead to anything significant. We don't just assume that because SMT is present at a level that it's going to turn around. In this case, price has been really bullish. We need evidence that that trend has changed. What changes the trend? The 3 PD array principle, right? So if we look at this, right, we have the fair value gap in here, the balanced price range overall, so you can actually disregard that and use this fair value gap range. So we got that fair value gap. We have the swing low, the SMT, and then of course, we have this order block. You could even wait as far as up until price gets to here. But I would go out on a limb and say that if this low is violated and we were to get below this fair value gap, that's enough for me off the heels of this SMT to turn my attention now to targeting as far as down here. Okay. And then of course, before that takes place, there's each candle is a weekly candle. So each low that hasn't been tapped into is a target of liquidity as price would march down to those levels, right? So again, it's a very, very important aspect of things, and that is my assumption as far as whether this is going to change or not. I don't think it's going to change just yet. It may turn around. This may be a point in time where price finally kicks in line with what the bonds are doing overall. Maybe it wants to follow that huge decline we see here in the bonds. We'll see if that takes place. We confirm that by these levels over here being violated. Now, if we move to the daily chart, we could see how this may set up because this breaker failed, right? That's another indication that price is probably not done, right? So we now have a overlapping fair value gap. We have a lot of volume imbalances in here too. This is a new week opening gap. So we'll see if we can stay above this fair value gap, treat this area as a balanced price range. Basically, we don't want to see this specific area in here get traded through too deeply. Up until the midpoint here is what I would like to see respected. I wouldn't be surprised if it does wick down into there, but we have to see how this SMT is going to be treated. I'd prefer to see a retracement into this area. It may not want to do that though, because again, there's a lot of overlapping price delivery in here. So it may not really care too much about trying to dig too deeper before it takes off. But again, that obviously remains to be seen. We've left the relative equal highs above here on the euro. So that's an interesting observation. mark this one off too. So that is a pool of liquidity we want to look at. Aside from the high, though, we have this fair value gap also. The price may want to be digging into a bit. Go and clear up some of that. Okay. So we're going to keep that in mind. If we move up to the weekly, let's see what else. It's a pretty strong wick, so we'll see what happens here. This whole move higher was a market maker buy model. Right? Whenever price goes lower to go higher, even if it's just like this, like a small retracement to go higher, you want to think market maker buy model. If price is going lower, like this retracement, or just like this, from this low up to the high, then dropped, that's a market maker sell model. Inside these little pieces of small retracements, if we think it's going higher to go lower in a downtrend here, for this example, this low becomes the original consolidation. When price retraces to a premium array of some kind, that could be identified in this retracement as a smart money reversal point. And then as price wants to march down and run off this retracement to continue the short, the rest of that would end up being the completion of the market maker sell model. And this could be operating within a larger market maker sell model because price went up to go lower here, right? So that's, your mind should jump, at least mine does. Mine jumps to market maker buy and sell model. What are we in line with? Because ICT has mentioned before that every moment in the marketplace, on some time frame or another, we are in a market maker buy or sell model. Always, all the time. It's a big statement. But if you go in and look for this with that in mind, you'll quickly identify that, wow, this is a fact. Even in these small retracements, whenever you see the higher time frame, retracing bearish, but you think it's going to end up bullish, watch for that retracement and try to identify market maker buy models in this case, or market maker sell models if it's going lower. Does the weekly wick of the previous week offer a PD array at Coach Coin Crush? So you're talking about this one right here, I'm assuming? I would have to say yes. And then, of course, we have this fair value gap in there. I'm not too sure exactly how excited it's going to be to want to get down there. It depends really moving forward what the SMT is going to do here. And then, yeah, every time price, well, let's just talk in like generalized terms. If we see price moving higher, every down wick, you want to watch the midpoints. And then as price punches through, right, if you see a wick like this, you want to look at that midpoint also as a place where if price is going to go higher, if it retraces into that, the more it respects that, the better. We want to anticipate that the midpoint is going to be respected because wicks are very important to identify PD arrays or just to help identify order flow. If the middle portion of up wicks in an up move in candles like this are being respected, that's a good signal that we're in buy side delivery. If the down wicks, right, midpoints are being respected and price continues to run higher off of something like this, like it retraced, hit a PD array, and then the next candle retraced into it, couldn't break it, right? That's a good indication that order flow is still bullish. And then, of course, vice versa is true for shorts, right? If you see like an up wick delivering or like a down wick delivering, the midpoint should be respected if it's going to go lower, right? You could see that here in this example. And then, of course, an up wick, if the next candle can print into it, not even be able to break into the midpoint, or a down wick midpoint's being respected as the price prints, that's confirming or helping you visually understand and read price action supporting this particular idea going lower. And again, it's the same with the buy side. Up wick here, going through a candle, price returned back to the midpoint of it. It couldn't, right? So it just kept going higher, right? Because again, that's creating balanced price ranges, right? You want to think about it from that perspective, right? So, I mean, you quickly, just off of what we're looking at here, if you just look at every single candle and think about things from that perspective, that's a very powerful understanding. And it's something that, like, just like how market maker buy and sell models really ramp up and amplify your ability to gauge price and analyze price and understand the storyline. This is the same when it comes to the wicks, except this is more of a order flow identification idea, aside from like other PD arrays, how those are being respected or not. So these are things that you want to keep in mind as you watch price print on every time frame. You know, of course, your particular idea is rooted on the higher time frame delivery in terms of narrative, but yeah, this is something that real time can be observed on the lower time frame. When you're in an opportunity, these are things you want to think about, right? If you're in an entry, look at these things because the same thing takes place. Again, you want to keep in mind what's being shown on the higher time frame. You don't want to just look at this on the lower time frame ever. It has to be supported by the higher time frame. And then you mix this logic together, you have a beautiful tapestry of multiple things working at the same time, like an algorithm, right? Because it is an algorithm. Your model, the process you employ, that's an algorithm. Okay, you're the algorithm in that case, right? It's just your special way of doing things. You know, your process, you know, you want to look at it that way. You know, different little elements like we talk about all the time are extremely helpful. And you're just basically critiquing your own algorithm, you know, because all the stuff that we think of in the marketplace, a computer coder can probably go in and make it work the way that you think, which I'm trying to think about ways to do that. That's like a future project I got going on. I've never mentioned that to anybody, but I definitely want to see what my options are for that. Getting everything that I have in my mind and logic I use, see if I can put it into something like that. And yeah, I think that'd be pretty awesome. On the daily, there was a bearish candle with the high right, the consequent encroachment of the daily wick. The daily, let me go back. Let me look real quick what you're talking about. The daily, there's a bearish candle with the high right consequent encroachment of the wick. Oh yeah, right here. Mind you, this large wick is overlapped with what? A fair value gap. So what does that mean? It should act as a balanced price range, right? It should not violate that. And then of course you see this from the daily chart. Where are your three PD arrays? Fair value gap, the wick midpoint, the order block, and the low. So if price was to violate those levels, what do you think? Where should your thinking go? To sell side. Very simplistic way of gauging order flow, right? Very, very simplistic. And it's not talked about in this easy of a term because people want to make it complicated so they can make you subservient to them or to sell you something, right? Like I have a private community, but hey, that's for people that want to be more intimate, build a more intimate relationship and need that type of service. You know, I don't not teach powerful stuff just because I'm on YouTube, even though it's been taken advantage of before. And, you know, people have not been grateful for it, unfortunately. It caused a whole lot of irritation from to me, you know, because the way they acted and behaved. But, yeah, I'll support PD arrays for now, at least. Yeah, I try to look for one time frame below the one I am looking at for support or invalidation idea. So instead of looking on one time frame below, you want to look at actually one time frame above. You can kind of mix that, but remember the higher time frame is the lower time frame is subservient to the higher time frame. So if you have like the 5 minute and you're looking for invalidation principles, like say your entry's on the 5 minute, but you're going down to 1 minute and you're looking for invalidation there, that's not something I advise you to do. You want to make sure that your invalidation points are on either the time frame you're looking at for an entry or a time frame or two above when you're looking for opportunities. Like if you're engaging, when it comes to bias and narrative, you want to look obviously from these higher time frames that we talk about all the time. All right, good, Fritz. I'm glad that I could step in front of that, because yeah, that's a very, very important thing, very important, because again, there's a sequence in terms of how things need to be applied and how certain tools are used. And so I'm very glad that I got in front of that for you, because yeah, it's one of those little nuanced things, right? That it's not like super obvious, but I'm glad that you mentioned that, because that's very, very important. Yeah, Sophie. Hey man, I got enough gold to go on for a lifetime. Let me tell you. Just being in the private community for that small amount, there's so many things that we can expand upon. This is definitely what I talk about here is definitely enough for, someone to really, really amplify what they're trying to do. And then of course there's me teaching it, but then there's also needing hands-on help, like to apply it. And of course that's obviously the benefit from being able to go live with me 6 days a week versus only 2, and one's actually trading, and the one's this type of situation. You know what I mean? So there's, slight difference, but still helpful, still very helpful. And I'm glad that it's helped a lot of you guys, even though there's a limited capacity. But yeah, so I hope this makes sense. So yeah, I'm going to continue seeking buy side. The week's going to start. So like I mentioned at the beginning of the call, when we start the week, we anticipate price going against us on Sunday, Monday, sometimes going into Tuesday, depending on the news schedule. And then, of course, the higher low should form generally in that vicinity on Tuesday, Wednesday, 70% chance. And that should be where the lion's portion of our risk is applied. And then that should be where we can corner in price to try to get the lion's portion of it. But then, of course, that doesn't mean you can't trade on the beginning of the week. It just obviously means you need to lower your risk, expect price to go against you, and then try to trade it with that in mind. And sometimes, obviously, it'll just run on Monday. Sometimes it'll just take off, right? But that's something you got to consider. But it's obviously we have to adjust if we see things like that take place. That's just confirming that price is in a hurry to get somewhere. There's a whole lesson we could talk about in terms of that, which I'll save for another day, so we can get through this a little quickly. But yeah, I hope this makes sense as far as what we're looking for. The balanced price range idea is still valid down here. Once price gets above this high, the breaker here becomes a breaker. It's not a breaker just yet because it's kind of just showing SMT. But if it was to get above that, we also again have the weekly fair value gap here. So that getting ran through and pushed away from to the buy side would turn that into a balanced price range. And then we have the breaker as well. So again, we'd need a lot of price delivery to turn us off of bullishness if that does take place. We already need to see, for the GBP USD at least, we already need to see that breakdown below here in order for us to really change our perspective as far as, us changing from bullish to bearish. And of course, there's a cracking correlation between the interest rate markets in regards to this, but it is what it is. So yeah, I hope all this stuff makes sense. And yeah, so with that being said, we'll move on to DXY. Again, we were talking about market maker sell model, and obviously that beautifully came to fruition. I'll have you go and review some the calls. I put a diamond on 2 of them because they were some of the most accurate analysis of the year. Majority of the stuff we've done this year, for those of you that have been here, has been breathtakingly accurate. But those 2 specific days, the 2 with diamonds on them from like 2 or 3 weeks ago, those are super helpful. They show what would have changed us from bearish to bullish, why we could trust a particular move to the downside if that was to stay intact, and just a big conversation about balanced price ranges and so much other stuff. So I highly advise you guys to go watch those. And those of you that haven't already, also, I advise you to go watch the video that's labeled Keys to Daily Bias. That was one of my best breakdowns of the process. And I think it's, very helpful. So it's something that we do over and over, but I focused on some specific things that I want you guys to go look at if you haven't already. So yeah, definitely go do that. So yeah, we see that the weekly bearish order block respected. Second stage distribution delivery as identified was beautifully operated. We saw that this retracement into this monthly fair value gap, we navigated that live as well. In my private community, we talked about that a lot as well. And you could see that the levels of invalidation were respected. When price was retracing into this, we had a volume imbalance, we had the high here, and we had this order block / breaker. The midpoint of that was part of the strong invalidation if it was going to be violated. Guess what happened? It stayed below that. Guess what happened also? It stayed within this monthly bearish fair value gap that was also a balanced price range. So what happened? Price aggressively repriced below it, breaking through, leaving this fair value gap on its way to our target. We've had this identified as a target since we were up here. Okay, that is a very long range target to identify in such a large window of opportunity. Like, that's incredible. Like, to see things that far ahead, like that, like much in advance, I mean, it amazes me, you know. I know I'm pretty decent at trading, but for this type of, like, imagine me putting an options trade, having faith that something was going to run that far. You know how much money you can make off that? I don't trade options, but just this skill set is, it's just breathtaking. It really is. And that's not to toot my own horn. It's just to really push the glory back to ICT and then, of course, God, right? Just to be able to have this opportunity is insane. To have you guys here to also witness it and also take advantage of it is also a blessing in itself. But it's just incredible, the accuracy. And for anybody to deny that this stuff is what it is and as powerful as it is, I mean, they are so ignorant. It's just, and you can't even get into an argument with any of these people because it's like they just don't know what they don't know. And it's not, I mean, it is their fault because they don't want to take advantage of it and study it on their own because they let other people on the internet think for them, which is really unfortunate. They must be pretty unhappy if that's how they live their lives. But it's so unfortunate, you know. But yeah, we've basically called this entire move. I called this drop as well. So I also called this huge run to the buy side. All documented, you know, don't take my word for it. You know, a lot of new people pop in and, you know, hear me talk or whatever, and they may assume. But this stuff is incredible. Like, it's insane. And I've been doing it publicly. And it just kind of really amplifies the fact that not only does ICT do this, but you can do this too as a student. And people like me are out here showing that it's possible for you. I'm not anything special, you know, but I'm calling the market continuously. And I'm seeing my students do it too. My students / ICT students, right? Because it's kind of like a dual thing going on. You know, I'm just here to help glue things and teach you my process. And, you know, you do what you will. You pick and choose what you're going to use to create your own. And, you know, again, part of the private community benefits is also, you know, I'm there to help you build your model, because most people have no idea how to build their model. You hear that thrown around all the time. How do I build a model? I hear the custom portion of things and all this stuff, but I don't know. I don't understand how to even go about that. Well, there's ways, you know, that I talk to my students about. ICT's taught this before, you know, not publicly, but he's taught it, you know, so the tactics are there, and it proves accurate. It proves effective, and it's amazing to know that you can build something of your own. You know, we learn same concepts, but we can still have our own ideas, our own process, our own algorithm, right? Using very similar concepts while still making it a very personalized experience that you can claim it's yours. You know, it's just, you know, you got the pieces from ICT to build it. You know, and you know, me in some capacity. It's kind of like how, you know, you'll buy some supplies off of a company, but then you'll be able to go in there and make your own product. You know, it has some of the same supplies from whoever you got them from, but at the same time, you can still build an entirely new product that's yours, right? But of course, you don't want to make it seem like you created it, like you found it on your own, because that's totally plagiarizing. It's stupid. Or renaming things and all that's hella dumb. You know, but you could still walk in confidence knowing that you're able to create your own model, your own system, and it's yours. ICT has explicitly mentioned that he's allowed us to do that. He's given us the opportunity to do that. And that's why he has so many models that he teaches, because maybe you don't see a breaker, but you see an order block. Order blocks and breakers on different time frames, if you scale through different time frames, you'll see that a lot of times a 15-minute breaker is a 1-hour order block, right? You'll be able to see that it overlaps. So it just depends on what you see in the market, so it can make sense to you, and then you just lean into that. But little do people know that if you understand one model and another one makes sense, or another PD array makes sense, a lot of times on different time frames, you'll be able to see they overlap. Like optimal trade entry too. Optimal trade entry can line up with a breaker, right? Maybe you just don't see the breaker, but you like the optimal trade entry logic. There's nothing wrong with that, But again, that's just like the personalized effect. We're all different. We all see things differently, learn differently, have different views and perspectives, and learn differently. If I didn't mention that already, so that's why it's just amazing. And again, I say all that to say, you can have your personalized approach, and it's just amazing. And our personalized approach, the way that we do things here, a lot of the stuff is taught in a way that most don't teach it, because they don't want to give it all to anybody. But there's so much to expand upon. It's like if you teach something that's helpful, that ICT has mentioned before, it's not unreasonable, or it's not like it shouldn't be taught, right? At least at a basic level. Even the basic level stuff is still extremely powerful. But the students like you guys get the opportunity to go real deep, because you guys spend the time, you're interested, and that's the type of students I like to attract. I'd rather have 6 or 7 people on a continuous basis viewing what I'm doing and actually finding impact, versus 100 people that whine and complain all the time, demanding signals. I'd much rather have more quality over quantity, and that's, since I started my private community, or any community, it's kind of how I looked at it. And I'm going to keep it that way, because, it's just more enjoyable for me to have people like you guys around. And of course, there's a lot of those types of people out there. So, that's why I ask you guys all the time, if you share the videos and like and subscribe, and, tell people that tell people that that are into trading. If you can invite them, so they can, similar-minded people can join the conversation and maybe add value and learn on their own, and be able to bless their families as a result as well. I mean, it's highly encouraged and much appreciated, because you're helping people you care about, you're helping the community, and then you're also helping me reach more people. So it's like a win-win-win-win, right? So yeah. So I'm assuming that DXY, because we've broken through the lowdown here, and we've seen a dramatic increase and potential likelihood for the yields to go higher. I'm assuming that probably all this price delivery was just to come down and unseat this very large pool of liquidity, because a lot of the tariffs and all these things that are taking place, like I've been mentioning, everybody says in the economy, that's good for the U.S. dollar. That strengthens the U.S. dollar. And then bringing business back to America, that's a powerful thing for the U.S. dollar. It's not something that should send the U.S. dollar lower. It's just the uncertainty is what's being priced in. That's what I've been hearing from a lot of people that are economists and whatnot. It's not like they know everything, but it just makes sense how that would be a good thing for the U.S. dollar. So I'm just assuming that, given our understanding of manipulation, that they may be running price lower to purge out or unseat people at a very logical level, which is down here. And then if we end up seeing price rally and start to rebound as a result, that would just support the fact that, first of all, we see this going higher. Second of all, we see and understand that the news that's been coming out is actually good for the U.S. dollar. And again, if we see a rally as a result of that, that's just going to be really, really powerful for us to then watch this probably skyrocket through, maybe even blow out all-time highs in a real healthy sense. This was all fake. Okay, this was all pumped up through printing more and more and more money for no reason. Okay, and then of course what goes up must come down. So, Oh, another thing too, I called this entire run to the buy side. I remember this fair value gap was explicitly talked about. These highs were explicitly talked about. Again, if you just go back to a live stream I did in October, I mean, you could really dig into some of that because, man, it's insane to just be able to look back. The feeling you get when you analyze things, note them, and then you're able to look at price and remember what you did and see just how accurate it was, or be able to even just learn from the mistakes you make. I mean, it's an amazing thing. It's like one of the most fulfilling things, at least for me. It's incredible. So Fritz says DXY monthly shows nicely how you earlier mentioned that repeated visits to higher low end up failing. In this case, the low. Yeah, exactly. Yeah, 100%. And then, I mean, you could even see, oh yeah, I mean, it didn't really do much in this regard. I mean, it kind of did too, right? It revisited, finally blew through the entire thing, hit a bearish order block, and that was triggered into just rampage through. Notice how it overlapped fair value gaps and they never revisited those levels once they got overlapped. Notice how this up wick here, price came back into it, respected it at first, still respected it, and then finally blew through it. And what did that cause? That caused price to dig deeper. Once it dug through this and blew through this, what did it do? It dug deeper and deeper. And then once it got down into this level, what did it do? It ended up reaching through and blowing out these equal lows. Again, we've been ahead of buy side delivery and sell side delivery all throughout this since September-ish of last year. And it's just been a amazing ride. So yeah, again, in terms of what we're trying to see moving forward, at least for this week, I'm going to try to anticipate that because we were so aggressively bearish, something like this is going to happen, most likely. It depends. We'll see kind of how price wants to behave up in this. If we are going to have a more extended delivery to the downside, a side note, I think I mentioned this in my market maker buy and sell model video. Whenever you see a market maker buy or sell model create and complete, like it did here, that entire buy side, sell side range should be looked at as a overall balanced price range. Right? It's the same with like retracements here that end up like this. Okay, this was a market maker sell model to get down below this low, but on this time frame, it is a retracement on the daily. But if you go to like the 15-minute or 5-minute, you'll see that all this was pretty much a market maker sell model. Once that got completed, because it was going to still be bearish, price used it and didn't even return to the middle portion of that range, showing you that we are in a healthy delivery still to the downside. Okay, so yeah, I hope that makes sense. Very powerful insight right there. Again, just another piece to the balanced price range understanding. And again, it goes deep. Balanced price. I could sit here and talk about balanced price ranges for 4 hours and still not be done. Okay, it's insane what can be talked about in relation to that concept. But yeah, so starting the week, we've been so aggressive. Again, I want to see something like this take place. We have this low. We have a weekly fair value gap. We have this volume imbalance. I really wouldn't be surprised if we have a candle that prints up into that volume imbalance. If I can get the colors right. So yeah, let's keep our eyes on that possibility because price has been so aggressive, because we have hit a very large opposing PD array. In this case, it's a sell side low, significant sell side lows. So when that type of thing happens, especially if it was one-sided, very aggressive, everybody and their mama's going to want to sell the dollar coming into next week. So because that's happening, and that is a potential sentiment, we want to see if there is some type of retracement that gets up into here. And again, I won't be bullish for the DXY long term unless this was violated, because we have fair value gap, volume imbalance, down wick, up candles, creates a bearish order block, and then a swing high. That would be needing to be violated unless there's a swing high that forms somewhere in here, and then it violates that swing high and then gets above this weekly fair value gap. That would then make me feel like more short-term signals are showing us that price may want to turn around And then, of course, if the yields continue to rally, that would also be supportive for that scenario. But again, until that takes place, things have still been cracked in correlation overall. So we need price action technically to show us what it's going to do here. I'm going into the week because we're bearish, because we blew out this low, anticipating possible return back into this daily fair value gap. And again, those are my invalidation ideas too. If it just runs up and doesn't create any type of highs that can be reasonably used as a potential break or shift in market structure again, or just like a liquidity pool that gets ran out opposed to the downside, this is my line in the sand. If price was to trade all the way up into this level, I'm already throwing up red flags. Like, okay, it may not be trustworthy to continue to see this go lower if those things start to take place. And then, of course, that would all confirm or be supportive of the idea that this was just a run on stops to position price maybe for a market maker buy model. Right? This whole side over here may have just been the sell side of the curve. And then if we break this high, that may set up the smart money reversal perspective to go higher. And then, maybe it ends up sending us into a turnaround to go higher. Right? So that's a more like protracted, like long-term possible scenario. If the highs are to be taken up here, that would be my view if we get up above this high. Right? That's what I would classify. And then this would have to act as support. This area in here would act as second stage distribution. And then we would be on a rising tear to try to break through the highs up here. All of that would be supportive of the fact that tariffs and everything happening in the economy in the United States, it would be very indicative of that being strong, right, for the U.S. dollar, or positive like we've been saying it is. Because fundamentally that's true, bringing more money back to a country, putting tariffs on people, right, building more income, right, bringing jobs back to the United States. All that stuff is positive economic stimulus for this. And then, of course, when tax cuts happen, that's another thing that's powerful for productivity in the U.S. economy, because that'll stimulate business growth, because more business gets done when there's less tax liability, because they're not worried about it, and it's easier to run a business because your finances can really stabilize because you get to keep more of the money you make. So again, all these things are in the pipeline. So those things that we fundamentally got to keep our mind on, our eyes on, and just keep watching as those situations unfold. But of course, technically, this mode of delivery won't turn on until this high is violated. Otherwise, we're going to continue to see price tank, and any retracement is just that, because the narrative is still bearish. That changes if we break above this high here and start to really close above. And like we got a monthly fair value gap in here. So that, again, that's another reason why this level is so important. Because if we violate this high, that's violating a monthly fair value gap that should have held like it did. It's violating multiple new week opening gaps. One here, 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 here. And of course, breaking above that, we got one here, here, here. So again, there's just so many layered pieces of layered levels of importance that would be getting violated if this has to be broken. So again, that just continues to amplify why this level would be important on the back end of obviously the 3 PD arrays. Okay, so that is my view for DXY. Okay, we've got daily fair value gap. That's what my eyes are on. And unless that changes by price just really rampaging through the high, we're going to continue to watch every retracement to a PD array act as a retracement to continue to go lower and set up further shorts. Okay, and of course that could be the retracement here is already being triggered off the fact that we ran out these significant sell side liquidity pools. Okay, so hope that makes sense. That being said, we will move on to the 3 indices, look at what this has got in store for us. So if we look at this time frame, there's no 3 PD arrays that have been violated in any significant capacity, so we're still in bearish order flow. There is obviously it's been a very strong movement to the buy side If we go to the weekly, let's actually come up here. Mark out this 2-day fair value gap. Another 2-day fair value gap. Got an order block here. Bearish with an order block. And then there's obviously an interest for price to potentially want to go lower. So again, same thing here too, right? DXY had that swing high I just mentioned as a invalidation point. Same thing here. We have a fair value gap. We have an order block, another order block. We got this large wick. So again, if it pushes through that, that's going against what this wick should be doing. This should hold price lower. Okay, we're in a downtrend. This is just a huge retracement because of the excitement that was pumped into the market because of deals being made. That's a good indication for what's to come if deals can also continue to be made in the U.S. economy with these other countries. So the more good deals take place, the better things are going to be for the U.S. economy. And the more certainty will come into the marketplace, which in turn will then lead to this potentially pumping up for good reason. All right, so until something like that takes place, currently right now we're in bearish order flow. So we are going to continue to observe price wanting to continue to rage lower and just see this as a strong retracement that turned price to the buy side. We do have these wicks down here. So, for like the Dow, they're staying above that. We do have the wicks here for the NQ, staying above that for now. Wick here, large wick here. So we're going to watch how that behaves. We have this large wick on the lower time frame from the call. I think it was just in my private community. We navigated the remainder of the week. Talked about, if I can go to the 1 hour, talked about this range. The delivery here, how the midpoint of that range and the midpoint of this fair value gap should be respected. Obviously it was, right? I wanted to see if it was going to be super aggressive and bullish, if it could stay above that, right? But it ended up declining. This decline, if it does end up showing that it wants to attack the buy side, this may turn into a market maker buy model. And then of course, the consolidation up here may actually turn into something significant if it does end up turning around and being bullish. I'm not saying that's going to take place yet. I need more information to agree with that. But this may end up being the early groundwork for a market maker buy model. Very, very whipsaw, wicky, like jerky market maker buy model. This may end up being that. And then of course, if this high is going to be taken, this decline into this area down here may end up resulting in this being a smart money reversal. And then of course, sending price higher as a result of that. But we'll see, right? I'm not going to commit to that until proven. I'm going to stick to the downtrend until obviously we see more evidence that things are going to go higher. I'll tell you one thing. If this high is violated, my eyes go to these equal highs up here. I don't know why it says monthly low there. Sorry about that. It's a weekly high. If I can find the label. Where did it go? There it is. So yeah, if we lose this high, this weekly high up here is going to be, this is the previous week's high here too. So, that's technically a weekly high too. So this is a previous week's high. So that's going to be important. And of course we have the previous week's low. We have a low here from previous week. So again, that's going to be important. I've talked about this yearly order block the last couple of days, or like from the last week or so. Very interesting how even on the yearly time frame, specific PD arrays are impactful. Look at the move that was presented off that. It's amazing. Most people don't know why it probably retraced from there or turned around. They probably don't know. They're like, oh, what happened? I have no idea why this jumped. Well, guess what? We do. Because we're very thorough. Okay. We try to take it to the next level at all levels. So yeah, so you see this shift in market structure. I'm trying to watch this and see how that wants to behave. If it wants to, act as a smart shift in market structure. Again, if we run above this high here, that's what I need to see to further confirm. Just given the rocky landscape and the uncertainty, stuff like that, I want to be very demanding. I was very demanding last week. I missed a couple moves because I was being so demanding in my private community. We talked about that experience. Students got to see my mindset. Some of you guys get to see it too on the Tuesday lives when it's a little bit hectic. I think I think that somewhat took place this week too. Well, actually, I think we were able to call. Was it that one? No, I think it was this one. This right here reminds me of this, because we called this market maker sell model in line, like absolutely beautifully live on a weekly basis, because this ran up into a weekly fair value gap, and then there was a 15-minute fair value gap here that I showed on Instagram that I engaged, taking down this to the lows. But yeah, it's been spectacular. So this run, right? If we go right here to the lower time frame, let me go show you guys something. So this whole price delivery in here, this is that little piece of price action. This it's hard to witness. So you see this right here, this little run higher, drop lower. It looks. You can't realize that there's a market maker sell model taking place unless you go down to like the 1 minute. Okay, so let's go pull that up here on the 1 minute, so I can show you that piece of price delivery was present, or presented us with a very clear market maker sell model. Consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution, second stage distribution, and look at the fast move off that second stage distribution. That's the key signature when you're identifying market maker buy and sell models. That is a key indication that you're in line with the proper analysis and identification of the second stage distribution. This type of delivery, if you get the market maker buy or sell model second stage distribution outlined, you can just watch the entire thing take place. And then once you see that is ICT's favorite model. He mentioned it a couple times, saying that if he could pick one model out of all the tools he uses, it'd be the second stage distribution in a market maker buy or sell model, because it's so fast. When you identify it, every single market maker buy and sell model that is accurately identified has this opportunity there. It is always there, unless the market maker model is going to fail. And if it fails, then obviously it may be going back the other way, which, in that case, you may see it turn into a market maker buy model. Like it just goes from one to the next. A failed market maker buy and sell model, when you're able to identify it, is just as important as identifying a second stage distribution, or just identifying the right one, right? The right components. Okay. So yeah. With that being said, I just wanted to point that out, show you that they're everywhere. They're freaking everywhere. But yeah, so again, if I'm on a short, I would prefer, going into next week, I would definitely prefer to see us give a displacement through the low, and then try to use this failure swing as a low resistance liquidity run on our way to this quarterly, because that's what this is. This is a quarterly fair value gap on the 3-month chart. So that is a pretty solid potential pool of liquidity. Then, of course, this is the current monthly low of April. April started over here. If I could look over my camera. All right, so April started, right? We have now rallied up April 1st is up here. It declined. We got back above. I mean, maybe this does end up going higher. You know, it tries to blow this out. Again, it wouldn't disqualify much until we break through the high up here. Again, we have fair value gap. We have a gap in here. We also now have a swing high. And of course, if this swing high is violated, I mean, if it gets above this high, that's a problem. That's going to be an issue. Okay. I don't necessarily want to see it do that if we're going to continue to drop, because that may be showing us that, okay, now there's a failure swing. There's a run on highs here, very strong aggressive impulse. And then there's another run on highs. Like, that's not really indicative of something that's going to fully drop, right? Or continue to drop, at least for now. So that may start leaning us towards, you know, seeing price potentially rebound because of positive things coming into place. Again, I will look to short further. I'm going to go in thinking to short further unless we see this high violated. Once that high is violated, my eyes go to there, and then anything I look to engage will potentially be aiming at that point right up in here. This high, possibly even these relative equal highs. And then there's a buy side up here as well. Before it gets up into there, obviously it has possibilities to get up here too. This is a lower level. So yeah, we'll see. These are all buy side targets. Fair value gaps in here too that may get targeted. I would like to see next week though, given the narrative's still bearish, I would like to see us displace below some of this trend line liquidity. And then maybe even try to use this fair value gap area. Maybe if it blows through that, maybe return once more, create this as a balanced price range. I'd like to see it aggressively smash through this. Otherwise, this fair value gap here is going to act as a balanced price range, right? Delivery here, delivery through, and then start to push us towards buy side delivery. We do not jump on adjustments until proven, especially right now. So I'm going to assume that we're going to still drop because this was a lot of hype. This is based on Trump saying buy. So everybody went to the market buying. So the algorithm knew that because it was very public. And so it pumped it, you know, and then of course it came all the way back down to here. And then there's just so much uncertainty. So, you know, you gotta be very careful. Overall, things have been dropping, pricing in the uncertainty. So this is only going to be a very short-lived decline. So we'll see, right? Once we start seeing reasons to buy, we'll adjust. But for now, I need to see this high violated in order for me to change my assumptions. Okay, or start to change my assumptions. I hold on to a narrative until like physically pushed out of that view. So in support of higher time frame bearish narrative, I note the 1 hour volume imbalance on regular trading hours has a swing high that is an liquidity on ETH. You're talking about Ethereum? Like, wait a minute, what? External high? Or on electronic trading hours, ETH. I've been thinking about crypto so much, I saw ETH. I'm like, oh, wait, what? To get there, it needs to take the previous high, supporting perhaps open high, low, close for bearish week. Line of sand for customer, 1 hour liquidity, regular trading hours, perhaps. Yeah, I mean, yeah, possibilities. Yeah, those are possibilities. But yeah, just to keep things extremely simple in terms of like overall narrative, my line in the sand, first red flag is to see this high get violated. Once that high is violated, we then set this up as a possible bullish order block. And then depending on how, because this high gets violated, we have fair value gaps, volume imbalance looking like it doesn't want to be respected. And then of course we have a layered order block here. That's why my eye would go here, because if this order block was to then hold, that could be a framework for us to get up above the highs. And then if that happens, it would push us up into this level. Relax. You guys are wild. Yeah, crypto's been going insane, bro. Insane. I've been talking about XRP for years, And finally this year, the fruits of our labor and patience have been 100% proved correct. Those of you in my private community see my crypto stuff. I've been talking about this stuff to you guys since 2021. We can get into a whole conversation about crypto. I have a specific mentor for that too. Only one. I don't have a bunch of other opinions. I just have one because all his stuff that he's told me has worked. And the way he studies things is similar to how you're supposed to study stocks long term. So yeah, he's the only one that I put any faith in. It's even more scandalous than anything else. So many more scammers aside from the ones that are just in Forex and all that. Crypto, if you're not careful, oh my God. They take the fact that the masses are not fully in line with how everything works, and they just milk everybody. It's totally unbelievable. But yeah, so yeah, again, just to keep it easy and very simple to the point, for us to want to go higher for the NASDAQ and disrespect the downtrend and start showing evidence that we're probably going to rebound, it's going to have to get above this high, show that it really has interest to break out here, possibly see DXY maybe continue to fall, and then try to retrace into this order block. If this high is violated, this order block now becomes a level of invalidation, validation for buys and shorts. Okay, because if it was to hold the midpoint of this order block and stay above it and start to push higher, my eyes go here. But if it was to violate this high and then reject aggressively once more through this bearish bullish order block, then my eyes again can switch back down into here. If we go from this high to that low, we're technically at equilibrium, if I'm not mistaken. We're a little bit above. We're a little bit into premium. If you even go to the extreme, yeah, it's kind of above the premium. So yeah, we kind of can discount that view. So yeah, that's kind of how I'm going to operate with this order block and what we have at our disposal currently. So yeah, I'm a favor shorts going into the week, assuming that, maybe this is going to hold. Maybe the volume, the whole range up there could technically be used from the gap to the low of this fair value gap. So we'll see if we could stay below these levels and continue to drop. Then obviously that shows that buys shouldn't even be considered. But if it breaks above this level, and then however it responds inside this order block is going to determine whether I'm going to look to short still, or if I'm going to then look to quickly make an adjustment and start seeking some of the buy side delivery, and then maybe even get excited enough to take us up into here. Okay, so yeah. And again, if we get tax cuts in terms of like the economic policy that takes place for America, you are going to see explosions you probably have never seen before. I mean, the economy and stock market under Trump the first time was crazy. It was dynamic. It was so amazing the entire time he was president, from what I was seeing. So it's going to be wild. So let's just hope that he can get everything passed. But yeah, so that's kind of my opinion in a nutshell for all the assets we look at. I hope it all made sense. Do you guys have any final questions before we put a ribbon on this and call it a morning? Again, I sincerely, as always, appreciate all your guys' time that you spend. Again, you could be anywhere else, but you're here. You've been seeing the value in what it is I provide. And I'm grateful for that. So thank you guys. And again, just a reminder, if you guys have any friends that think like you, that are interested in trading like you, that you think can benefit from these calls or even provide value to our community, and just help build us an even more dynamic, supportive community, I'm greatly appreciative of you guys that go out and spread the word. So yeah, again, if you could do that for me, thank you ahead of time. And yeah. And Sufi, no worries, brother. You have access to me in way larger capacity. So if you need anything, just let me know. Just shoot me a DM and we can hop on a call. I'm probably going to do a call in a little bit because I have one of my friends that I want to bring into our community, share his experiences. He's done very well over the last couple of years. And he's started with me, right? So all the people that stuck it out, that started trading with me, they're all making money. Okay. Like it's insane. But all the ones that quit are obviously the ones that can't make money because they quit. But all the ones that have stuck with it and continue to do this stuff with the with ICT concepts solely, they've reaped the fruit of their labor over the last couple of years. And no worries, Fritz. Thank you too. Thank you as always as well. Thank you, Nutty Fafa, for being so consistent and supportive. I appreciate you as well. And Sufi, again, thank you too. Thank you for the trust and belief in me as a mentor, to invest in me as a mentor. And for that, I'm eternally grateful. And you'll have me here to invest in you as a student, even beyond, like when you become profitable, for many, many, many decades to come. As long as God keeps me here, I'll be here for you. Get ready for the next call. All right. Well, with that being said, you guys, God bless you. Appreciate y'all for hopping on, and I appreciate your attention and the time you spent. Hope you guys got value from today. Again, don't forget to like the video, share the video with anybody that you think can get value if you haven't already. And I guess I will catch up with you guys in either the free Discord for some of the things I'm going to mention there, and then in my private community we will have a call most likely later today. All right, and I'll see y'all then, and hope you guys have a good rest of your weekend. Take care.